Hey, it's Mark from Caliber Home Loans. Happy Friday. It has been a great day today. The week has been pretty choppy in the mortgage market. Hey, happy Friday. It is Mark. What happened to my... Hi, happy Friday. It's Mark from Caliber. It is... Hi, this is Mark from Caliber Home Loans. Happy Friday. It is August 16th. And I just want to go through the markets real quick. But before we get into the markets, let's talk about some news that came out a couple days ago about FHA and condos. So once upon a time, FHA would allow us to get spot approvals on condo units within complexes that weren't FHA approved. It was a great deal. It helped a lot of buyers. But that went away sometime before the meltdown, actually, right at the beginning of the meltdown. So they stopped doing that. So they have resurrected that, but the issue is that under the new rules, you have to have at least a 10% down payment. So I don't know a lot of FHA buyers with a 10% down payment. There's a niche for this, but it's going to be a very small niche. But at least they're moving in the right direction. I'm hoping that once this gets implemented and they see that it isn't helping as many buyers as they thought it would, that they'll start to relax the down payment requirements a little bit and take it back to 3.5% down. But the fact that they're actually looking at doing this, they're starting this in September. The fact that they're thinking about doing this at all is a good move. So let's go ahead and look at the markets. So we're looking at today's graph. So we're going to end up pricing is a little bit worse than when we started, which pushes rates up, but all in all, the rate at the beginning of the day is the same as the rate at the end of the day. So during the week's been pretty choppy for a lot of different reasons. We had that 800-point sell-off during the week. That moves money into the bond markets. When money moves into the bond markets, rates come down a little bit. So it's been pretty choppy all week. Rates have gone up and down by as much as an eighth, but we're pretty much where we started at the beginning of the week. Pricing is a little bit better, but not terribly, not enough to really move rates too much. So let's take a look at the month. The month, we're still higher than we were a month ago, 30 days ago, so rates are a little bit lower than they were 30 days ago, so we're still moving in the right direction. It's still rates are low. Rates are under 4% on a 30-year fixed, based on good credit, 20% down, that kind of thing. So there's no reason not to buy a house because of the rate. Rates are certainly low enough to get most people in the door. The Fed is now expected to reduce rates one or possibly two more times this year, once in September and once in December. I'm not quite sure I buy into that completely, maybe one more time, but it depends on what they think the overall economy is going to do. Some of the numbers that came out over the past week were a little bit hotter than expected, which means that they're inflationary. The news was better than expected, and as we've discussed before, good news on Main Street is bad news for bonds, because good news is considered inflationary, and the only way that a bondholder can fight future inflation is to require a higher yield or a higher rate on the bonds. So when they're trading, buying and selling, they're trading the rate up. So again, it's expected that the Fed may reduce rates up to two more times, a quarter point a pop. Do not expect mortgage rates to drop down a half a point by the end of the year, although some have suggested that. There's almost never a one-to-one relationship between what the Fed does and what mortgage rates do. That one-to-one relationship is more in the form of home equity lines, credit cards, bank accounts, money market accounts, that type of stuff, but not for mortgage rates, fixed first mortgage rates. Everything else though is moving along. The markets, I know inventory is very tight, so it's still hard for first-time home buyers in that $250,000 level or less to get a house without basically putting the offer in when they walk in through the door, which is unfortunate for first-time home buyers, because most first-time home buyers want to at least be able to have a conversation with either their parents or their friends or their neighbors or their relatives brothers and sisters, and by the time they're done having that conversation, the house is gone. So that continues to be an issue. We don't see I don't see anything that's going to change that anytime soon. So, having said that, you know, it's inventory is still tight, but if we can find a house, it's a great time to buy. Rates are low, and rates aren't going to go up anytime soon. So I'll be around all weekend. Let me know if there's something I can help you with. 248-705-8431, and you have a great weekend.